Today is on a Friday, the last trading day this week so far, and actually, I ended up missing this trade that I've been waiting for a very long time since last week. If you've been following my videos, I've been doing this analysis showing you that I was expecting this market to give me this drop at this point. So regardless, I want to do a quick market breakdown whereby I'll show you how we could have taken this trade and what we could have considered before taking this trade today. So the first thing that I normally do, from the previous analysis, I've been looking for this market giving me bearish structures, whereby it has been giving me these impulse move and corrections at this point. So from the beginning of this week, the market was giving us this. Even from the beginning of last week and this week, the market has been giving us this correction. All the way from down here to this area up here where we had this strong resistance at this point. So as you can already see, I have my structures already drawn. So I want to go to the bigger time frames, because normally for me to understand these kind of big moves that the market might be making, I have to understand what the market is doing from the bigger time frame perspective, then before coming down to my smaller time frames and look for my entries. So the first thing that I did in this market for me to identify something like this, I went all the way to the yearly time frame. Whereby from the yearly time frame, I identified what the market was doing from there. I understood what the market was doing from there. Then after understanding what the market was doing from the yearly time frame, I came down now to the smaller time frame to try to look what the market is doing there in those immediate areas. So if you look at this point, we have these 3 points at this point, and if we use our trend lines, you'll find that this is our first touch at this point, then this is the second touch at this point, then this is a third touch at this point, and that means that this is a resistance area from the yearly time frame. And normally when the market reaches the resistance areas, we expect the market to give us some kind of rejections, and that's exactly what is happening at this point. You see, from the beginning of this year, the market gave us this bullish trend all the way from down here, then reaching to this resistance zone that we had at this point. From this trend line, the market started rejecting around this area. So I'm just gonna put back my structures, then I keep showing you what the market is doing. So if we go down to the smaller time frame, which is the 6 months time frame, that's still the same thing that the market is doing at that point. Then let's go to the monthly time frame. Coming down to the monthly time frame again, I want to see the kind of candlestick the market is giving us at this point. At this time, you see, at this point we have these rejections, whereby we're having these inverted hammers at this point. These are kind of reversal patterns at this point, which means that there is a possibility of this market giving us a push to the downside, because I see this market is rejecting around this strong resistance zone that we have at this point. So another thing that you can observe from this point, you see, we had an impulse move all the way from down here, but the market hasn't given us any reversal pattern, any correction. So which means there's a possibility of this market will come down at least to give us a correction before continuing probably to push to the upward. So we should expect this market to come to this area down here, because you see, from this bigger time frame, after the market breaking above this area, it didn't give us a retest. We didn't have any retest of this support that we have at this point. So which means there's a probability of the market coming down all the way from up here to give us a retest at this point before probably continue pushing to the upwards. So that's probably what I was looking at this gold market from the monthly time frame. Then going again down to the smaller time frame, which is the weekly time frame. From the weekly time frame again, we had these reversal patterns at this point. So the market came all the way up here to this area and gave us these. The market came all the way to this area and gave us these double tops at this point. Then after giving us this double top, went up a little bit. We had this double top, broke below. It didn't break below this area, but we see this market was reacting around this area down here. So which means when you see a double top in a bigger time frame like this 4 or 5, 1 week time frame, that's a reversal pattern normally. So probably looking at this market giving us a reversal pattern at this point, I saw that there is a possibility of this market might be giving us a sign that we should have this market pushing at least to these key areas that we have down here. So I want to show you my key areas that I'll be looking for. So you see, this one of the key areas that I'm looking at down here. Then another key area that I'm looking at is this neckline that we have at this point from these structures that the market had given us from the previous months. So right now the market is up here, and I've told you guys that I'm expecting this market to continue giving us a reversal pattern at this point, and that's exactly what the market is doing. And again, let's go to the smaller time frame, like the daily time frame, and again try to see what kind of structures we have in there. So coming down to the daily time frame again, you see the market had already given us this head and shoulder at this point. We had this right shoulder at this point, then we had head at this point, then we had another shoulder at this point. So this is the left shoulder, head, right shoulder at this point. So probably then after that we had that downward push at that point to this neckline down here. So after having this impulse move to this neckline down here, this market went up a little bit. Then after going up a little bit, gave us this correction. So give us this correction, and now what's probably happening at this point, there's a possibility of this market continuing to push to the downside at this point. So if you look at this point, at this candlestick at this point, so if this market closes like this, today is on a Friday, so if this market closes like this today, which means on Monday I will be going to look for more sell entries from this point all the way down here, but we'll be taking our take profits at these key areas. Maybe at this point, then again we'll target all the way down here, because the reason why we could do that, because if this market closes at this point, it will give us these tweezer tops at this point. So these are the tweezer tops that we normally look for. These are kind of reversal patterns again, because the market has been on this small uptrend at this point. Then if it gives us these tweezer tops at this point, then which means that we'll be looking for more sell entries from this point, pushing all the way down. So that's from the daily time frame. And also from this daily time frame, you've seen the market has been on a downtrend, giving us this impulse move correction. So right now the correction has already been exhausted right now, so which means that this market is now ready to continue pushing to the downside. That's why you're seeing this drop at this point. So I want to show you from the smaller time frame how you could have taken your entry at this point, because for me, I did miss this entry. Even though I've been waiting for it for a very long time, I did miss it, but it's still okay, you know. There's always other opportunities in the market. So right now, let me just show you from the 4-hour time frame how you could have taken these entries at this point. Maybe how you could have taken an entry at this point and maybe made a few about because the market has moved about 391 pips all the way from up there. So looking at this point, this market was on an uptrend during on this 4-hour time frame. You see, we had this market giving us these uptrend structures at this point, whereby we had this higher high, higher low, higher high, higher low, giving us these kind of structures at this point. Then coming all the way up here, it gave us this false breakout at this point. Then, you know, giving us this false breakout at this point. Then again, this is a key area that we were looking at this point, because you see, from the previous impulse move that we had, there is this area that was a strong resistance zone at this point. So I was expecting the market to come and reject, probably play around this area for quite some time before giving us this impulse move at this point. So you see, the market came to this area, we had that rejection at that point, then we had this small consolidation at this point. Then you see the market went up a little bit at this point. If you look at this point, this is a strong resistance zone that we have at this point from the 4-hour time frame. So this market came all the way to this resistance zone that we are having at this point. Then after that, we're seeing the market rejecting around this area. I want to show you the kind of structure the market was making from the 1-hour time frame. Looking this market from the 1-hour time frame, we had this kind of structure up here, we had this kind of structure up here, and when we look at this kind of structure the market did form at this point. This was a divergency structure, and whenever you see a divergency, that means that the market, that's a reversal pattern, guys. So whenever you look at the market and you see the market giving you a divergency, that's a reversal pattern at that point. So you see the market was giving us this divergence at this point. Then after that, when we go further to the smaller time frame, like the 30 minutes time frame, the market had given us this double top at this point. So we had this double top at this point. After having this double top, we see the market coming down and breaking below these neckline of this double top that we had at this point. So which means probably at this point, if you wanted to take your entry, this could have been the best place to take your sell entry from this point. Then have your stop loss all the way up here. Then your target could have been at these areas where we have this. Maybe this could have been your first take profit at that point. After taking your entry from this point, this could have been your first take profit at this point, then your second take profit at this point, then maybe your third take profit at that point. But still you could hold it all the way down there, because you know this was a good swing entry all the way from up here. So you could have taken an entry from here, then hold it all the way down there, all the way down here, which could have been about 1,000 pips, guys. That's crazy. So right now the market has already gone, it has already left us. So right now what I'm gonna do, because still the market is on this upward channel at this point, it hasn't broken above below this upward channel that we're having at this point. So probably I'll expect to have to see how the market will be reacting around these areas. So I'll probably wait for maybe a correction, because I can't go in at this point. So the only thing that I can do is just wait for this market probably to give me a correction. Then after getting a correction, I'll go in and take my entries and take my sell entries from this point and go all the way down there. So probably how should I get my entries in this case? So in this case, I'll have my Fibonacci tool and just measure the retracements that probably the market might give me. Then after having that, I'll look for the 50-61 area or the 61-78 area. Then that's the area that I'll be keen to look at. So this is my 61-78 area. So this is my 50-61 area at this point. So probably we have a resistance zone at this point. You have this resistance zone at this point. So this is the area that I'll be looking at and see how the market will be reacting around this area. So if this market does come, it does give me a retracement to this area, which means I'll take my sell entry from this point. Then I'll just hold it all the way down there, because I believe that this market is still on a downtrend, and we have a high potential of this market to continue to push it to the downside, because it has already given us this correction that we are waiting for. And because we did miss this one, because I did miss this entry at this point, I told you I'll wait for this market at least to give me a correction to this area at this point. So probably if I have a correction to this area, I'll see how the market will react around this area. Then after that, I'll take my entry from there, then hold it all the way down there. So that's how I'm looking at the gold market again. And again, another confluence that you can normally use when trading the gold market, you can use the DXY. You can try to understand what the DXY is doing. Probably at this point, let's look at the DXY and see what the DXY has been doing today, and even from the previous week, So right now you can see the DXY was giving me this kind of structures at this point. You see, we were on a downtrend from the previous week. The previous weeks we were on this downtrend. Then after that we saw this DXY breaking above this downtrend, then giving us this inverse head and shoulder at this point, because we have an inverse head and shoulder at this point. Let me just zoom in like this so that you can see it. So we have this inverse head and shoulder at this point. We have this left shoulder at this point. Then the right shoulder is at this point. Then we have the head at this point. Then the market went up, came down, gave us this right shoulder at this point. Then we see the market giving us another impulse move all the way up here. Then after giving us that impulse move, it gave us this correction. And you see right now it gave us another impulse move at that point. So what is happening at this point? The market is giving out a correction before it probably continues pushing to the upwards, because looking at this market, it has broken above this resistance zone that we had at this point. So which means there's a possibility of this market going all the way to this area up here, and if that happens, that means that on the other side from the gold market, we'll be looking for more sell entries, because when the DXY is buying, we normally look for more sell entries on the gold market, and even on the maybe GBP USD, Euro USD, and even the silver market. So that's how I'm looking at this market, and I hope you learned something from here. So this profit and edge, make sure you join the links in my bio, join my free Telegram channel, and also follow all my other pages so that you can be getting this information when I share it out, guys. So thank you for watching this profit and edge. Signing out. Make sure you subscribe to my channel so that you'll be getting this information when I drop it on my video, on my channel. Thank you for watching this profit and edge. Signing out. See you in the next video.